Welcome to another video from Optatube. Today, we're plugging into a topic that, powers literally everything in our daily lives, but often stays completely in the dark: the super complex world of electricity markets. So have you ever actually wondered about that? Who decides what you pay for electricity? Is it just one big company? Is it the government? Or is it something a lot more dynamic, almost like a stock market for power? Well, the answer is all in how these markets are set up. And that's exactly what we're going to unpack right now. So here's the game plan for this quick explainer. We're going to start with the basic rules of the road, then we'll dive into 3 key ways markets are set up: the pool, direct deals, and the hybrid model. And to wrap it all up, we'll take a look at how we got here, from old school monopolies all the way to the AI-driven systems of the future. Okay, before we get into all the different flavors of markets, we really need to understand the fundamental rulebook that governs this whole thing. So what even is an electricity market structure?
The easiest way to think about it is like the official rule book for the entire energy game. It's the whole system, all the rules that decides how power is bought, sold, and priced. It's what connects the giant power plants that make the electricity to you, the person flipping the light switch. And here's the key. This structure is what determines everything, from how efficient the grid is to the price you actually pay.
All right, let's jump into our first model. This one is probably the easiest to picture. I want you to imagine a giant central stock exchange, right? But instead of trading company shares, everyone is buying and selling electricity. That's basically a pool market. So in this system, every single power producer submits a bid to a central operator. They're essentially saying, hey, I can make this much power for this much cash. The operator then takes all those offers, matches them up with how much power everyone needs, and sets one single clear price for everybody at that moment. What's really cool here is just how simple and elegant the model is. The flow is totally straightforward. You've got the generators on one side. They dump all their power into this central market pool, and from there, it gets sent out to all of us, the consumers. All the messy money stuff, it's handled right there in that one central hub. So the key things to remember about the pool model are pretty simple. It's centralized, it's super transparent because everyone sees the exact same price, and it's fantastic for balancing the grid in the short term. You see this kind of system in places like the UK and Spain. Okay, so what's the flip side to a big public exchange? Well, if the pool market is a stock market, then our next model, the direct deal or bilateral market, is way more like a series of private handshakes. In this world, there is no central operator clearing everything. Nope. Instead, power producers and big customers, like retailers or factories, they just negotiate contracts directly with each other, one-on-one. It's a totally decentralized way of doing things. And this little visual just nails the core idea, doesn't it? One specific generator cuts a deal directly with one specific retailer. Meanwhile, another generator might be making a completely different deal with a huge factory down the road. Every single contract is its own little private universe. Now, the huge advantage here is flexibility. You can negotiate pretty much anything: the price, the amount of power, how long the contract lasts. The trade-off, though, is that it's not very transparent, and you have to really, really trust the company on the other end of that deal. This model is pretty common in certain parts of the United States. So let's just put them head to head for a second. The pool market, it's centralized, has one price for everyone, which makes it really transparent. The bilateral market, it's decentralized, with privately negotiated prices, making it super flexible. I mean, they're 2 completely different ways of thinking about the problem. So what if you want the stability you get from a central market, but you also want the flexibility of those private deals? Well, that's a great question, and it brings us to our third model: the hybrid. A hybrid market, you guessed it, does exactly what it sounds like. It takes a central pool market for most of the daily energy trading, but it also lets companies sign those long-term private bilateral contracts on the side. This visual shows it perfectly. You've got the main river of energy flowing through that central pool, right? But then you also have these other direct deals happening off to the side. Companies use those to lock in prices for the long haul and cut down on their risk. So the crucial point here is that you get the best of both worlds. You get the efficiency and the see-through pricing of the pool, plus the stability and flexibility of direct contracts. It's this balanced approach that makes it so popular in major European markets like Germany and the Nord Pool region. All right, so now that we've got a handle on the main models, it's really important to remember that they didn't just pop into existence one day. These systems have been evolving and changing for decades. Seriously, the journey from having just a single, state-owned company running everything to the complex, interconnected markets we have today has been a wild ride. It's been driven by new technology, big policy changes, and just a constant push to be more efficient. Let's just quickly walk through this evolution. If you go back to the 1980s, it was simple. Big monopolies ran the whole show. Then, in the 90s, the first little seeds of competition started to sprout with independent power producers. By the 2000s, things really sped up, and market liberalization brought in the auction and pool models we just talked about. The 2010s were all about connecting markets across borders, like what happened in the EU. And today, the game is changing all over again, with the boom in renewables and new tech like blockchain. And looking ahead, wow, we are on the edge of a future with AI-driven pricing and even peer-to-peer markets where you could literally sell the extra power from your solar panels directly to your neighbor. This quote really just sums it all up, doesn't it? What started as this rigid, top-down system has totally transformed. It's now a responsive, dynamic, and more a consumer-focused ecosystem. It's a pretty remarkable story. And this evolution is only getting faster, driven by huge global trends and incredible new technologies. So if you're interested in the energy market, power system modeling, and just getting insights on what's happening globally, make sure you follow Optatube for more explainers just like this one. And that brings us to our final big question. We'll leave you with this to think about. As technology keeps accelerating, with AI starting to manage the grid and peer-to-peer trading becoming a real thing, what will the power market of 2040 even look like? The rules of the game are definitely changing faster than ever. Thanks for watching.